Guys, my name is Jeffrey Rodriguez and welcome to my channel. I post daily Forex technical analysis videos as well as Forex educational videos on just specifics to my strategy and whatnot in my trading. So in today's video, I want to talk about my favorite entry techniques, and they're all based off of concepts that I've learned from my mentor ICT. So the things I'll be talking about in today's video will all be things that I was taught by ICT. So you can actually find his information on YouTube by just searching ICT or Inner Circle Trader. So let's go ahead and jump right into the charts. For this example, I'm using USD JPY on a daily time frame, and one of the trade patterns that ICT teaches is called the turtle soup pattern, and I believe he got it from Larry Williams, or I forget what the guy's name is. I think it's Larry Williams, and there was a book on it or something that he had read, but that is one of the concepts that he teaches, and I think it's one of his favorite concepts. And the reason being is because you can get these really good, precise entries, as the market is basically turning in the opposite direction. So the turtle soup is basically when the market trades below an old high or low. Okay, so in this case, we're on a daily time frame. We've got a daily swing low right here, and a daily swing low is just a low with two candles beside it that close higher than the middle candle. Okay, so we got a daily swing low here, and the market trades through that. This is considered a, just looking for basically liquidity to be ran, so sell stops or buy stops, and in this case, this is sell stops. So there are orders underneath here that are set to trigger for breakout traders. So a lot of people that trade breakouts or trend continuations and stuff like that, they're looking for a key low or key high to be broken, and when that's broken, they basically have their limit order set there to trigger them in the market and then to go long or go short. Well, that always isn't the case, and the turtle soup basically gives you the opportunity to get on board without expecting it to continue lower or continue in the intended direction. You're seeing it as a potential reversal. So this is an example of a turtle soup. Sell stops cleared, market rallies higher. So this is an entry opportunity here. And then you also have what ICT calls an ICT breaker. And an ICT breaker is basically, this is considered an ICT bullish breaker. And the reason being is because it's two up candles, or it could be one up candle, but if we have two next to each other, I use both. So highlighting both of these, this is an ICT breaker, and we know that because we've cleared a level of sell stops, okay, then we've broken market structure. So let me just draw it, it'll be a little bit easier for you to see. You're basically looking for this scenario. Alright, this is your daily sell stop level, so that's this low, and then it runs below that to clear out the liquidity and then trades higher. This is your turtle soup entry opportunity, so that's here, and then once it breaks the high, right, that's considered a break in market structure. So if you haven't seen yesterday's video, watch that, and I basically explain what break in market structure is and how to find that. So we got a break in market structure. How would we get on board this? Well, we're going to wait for a retest of this market structure break. Why? Because this level here was acting as resistance, right? It was short-term resistance. Once we trade back above that, that becomes support. Old resistance always becomes support. Old support always becomes resistance. Okay? So it may not be as clear to you right now, but as you start studying and go back in your charts and see this over and over and over again, you'll start to see it before it happens and when it's actually unfolding. So these are my two favorite entry techniques, and I find my favorite one to be the ICT breaker, just because you don't always know how low it's going to go whenever it runs the liquidity. But once it breaks the market structure here, you know that it shouldn't come back below this gray box. If it does, then more than likely it's going to want to go back lower again. But typically the breaker pattern is my favorite entry setup. So hypothetically speaking, I would get long here, put my stop loss below here, and target each swing high going forward for a continued uptrend. So that's kind of how you would get on board as the reversal is unfolding, if there is a reversal happening in this pair. So let's see if we can actually find some examples on a lower time frame. So let's drop down to a 1 hour. I find the 1 hour time frame being the clearest to see the market structure breaks. So you can actually see it right here. So right here we've got a low, so a key low. Not necessarily a key low, but a short-term low. And a short-term low is just a low that the market engineers and then it takes the liquidity out from below it. So we're making higher highs, higher lows, higher highs. Bam. Came below here, and anybody that thought this was a break in direction, they thought that this was going to be a break in market structure and start selling it. This is why you have to be on board with a higher time frame. If you're just watching the charts on an hourly time frame, you're going to think this is a break in market structure and immediately want to go short this market. But you have to realize that this is a turtle soup entry opportunity. It's ran below a short-term low, then it's pushed back above. So me in particular, I'm going to wait for the breaker setup. So where is the breaker setup on this one? Well, it would be this up candle before the push down that took out the stops. Okay, so we can mark out this candle. You can mark out the full candle and the wick and everything, but since it's a small candle, I'm just going to use the body of it. And once we've broken above that, we haven't had a clear retest of that. And that's fine. It could still come back down here and retest it later on, but I would have never got on board this yet until I get a clear move that touches that, and then we push away. Okay, so I'm looking to enter once it comes back and touches this level of old resistance, which should now turn support. Okay, so let's see if we can find a better example here. Okay. So right here, we've got these highs and these highs. Market trades above it. Turtle soup entry here. Once the market trades below this low, here, we know we got a break in market structure. Why? Because if we're looking at the market, we're making higher lows and higher highs, right? Once we broke below this, that means we've got a high and then we've got a lower low in place. Okay, so any retest of this breaker, this is an ICT breaker right here, these two down candles before the push up that cleared out the stops. So let's mark out that. Okay, so we broke that here. Came back up, gave you an opportunity to enter right here short, sold off. Traded back up into it one more time, gave you another opportunity to enter short, sold off. Okay, so two opportunities there to get on board for these sells. And this was from 106.40 to 105.80. So right there you got 60 pips and 106.40 again to about 105. And about 80 pips here. So it just depends, you know, where you would have entered, what's your plan, what's your strategy for exiting, and all of that stuff. So just depending on that, you're going to enter and exit at different points. But, you know, you could see it unfold. Wait for that market structure break. wait for the retest of the ICT breaker, or if you could see the turtle soup unfolding, get on board the turtle soup, and then from 107.20 all the way down to 106, 120 pips, you would have locked in here, and you could have gotten on board the retest for a second potential entry opportunity, so a compounding position, and then compounded again here for a total of 3 entries with over 200 pips. So I hope that makes sense for you guys. Please leave a thumbs up on this video if you enjoyed it, and if you have any questions, please drop them in the comments below. I answer every single comment. If you haven't already, guys, make sure you hit that subscribe button, and I'll see you tomorrow.